Buongiorno a tutti. I am Paolo Sironi, and I'm your host for the Banker's Bookshelf podcast. The Banker's Bookshelf is our collective moment of critical thinking. We get inspired by authors and researchers of the most interesting books, papers, and publications which are finding their space in the libraries of curious bankers and fintech entrepreneurs. In each episode, our guests share views that shake the status quo and common assumptions in financial services. They challenge business culture and technology expectations to help us understand the banking present and its fintech future. With that, we can all make better informed business decisions. Therefore, it's a pleasure to open the episode 228 of Breaking Banks Europe, and our fourth episode of the Banker's Bookshelf with the recent work of the Economist Impact about potential world scenarios and how banking and fintech can fit in 2035. For that, let me introduce you to Edwin Saliba. Welcome to the show.
Thank you, Paolo. Thanks for having me.
Edwin, where are you based?
I'm based in New Jersey. So I live in New Jersey and I work in Manhattan, New York.
So for those who doesn't know, Edwin Saliba has more than 10 years of experience working with governments, UN agencies, and the private sector on solving pressing public policy challenges. His interests lie in the areas of climate change, technology, and public finance, and currently, Edwin is a senior analyst for policy and insights at the Economist Impact. So what's the Economist Impact? It's a research unit part of the Economist Group. It builds research on a 75-year track record of analysis across 205 countries, combining the rigor of a think tank with the creativity of a media brand to engage a globally influential audience. And I had the pleasure to engage with Economist Impact for the qualitative analysis included in a recent publication, Banking in 2035, 3 Possible Scenarios. So I'm glad that Edwin accepted my invitation to share content of this research work with the audience of the Banker's Bookshelf. Now, let me tell you what I found in this research, and then we ask Edwin to make insightful comments about his findings. The Economist Impact research opens with analysis of 5 megatrends that are particularly salient for banks and fintech. According to Edwin's research, they are foundational because their strength is bigger than a specific technology, geopolitical event, or regulatory shift. And they are about accelerated digital adaptation, economic fragmentation, shared global challenges, persistent social inequalities, ethics for business practices. Now, while most banks were able to ride out the storm of the pandemic and other crises from the last few years, the challenges banks still face from a societal, business, and regulatory perspective are unprecedented, also in the consideration of these 5 megatrends. To compete in a world where uncertainty is constant and issues like sustainability, equity, equality, and a sense of community have become a part of business strategy, banks must continuously adapt to stay relevant and resilient. So as we look to the future and banking role in our global economy, it's time to ask the bigger question, what's possible when we dare to do banking better? And that's what this report tries to highlight, looking at 3 possible scenarios. The first scenario is about how banks can regain trust. Technology is not trustworthy in itself, but it requires governance and policies to make positive impact and reduce negative externalities. As corporate and government collaboration is needed, not only that's proved difficult in the past, but it can't work well without a refreshed regulatory framework involving all parties in an ecosystem, fintech included. The second scenario is about a paradigm shift in climate action. How can banks contribute to the creation of impact while eradicating greenwashing? And the third scenario is about dealing with a fragmented world. In a world that closes up a bit more, banks are opening up for broader ecosystem interactions. How can all of this come together? So now this is a world dominated by fundamental uncertainty. And reasoning along scenarios helps us to open our decision-making framework to better identify risks and opportunities. And this is the reason why I liked reading this research by the Economist Impact, And I would like to ask Edwin to comment on it for us to get a better understanding. So then, Edwin, the research opens with 5 megatrends. Can you comment on all of them, one after the other?
Yeah, absolutely. And thanks again for having me on this podcast and also for contributing to our research. I think there are, well, present you've presented really well our three scenarios, but to go through some of the major trends that influence these scenarios, the first one was around kind of the digital transformation. And the same way we've seen kind of the industrial revolution, spread across Europe in the 18th century with the engine and fossil fuel at the heart of it. We're seeing now the digital transformation unfolding with data at the heart of it, and being accelerated with the advent of generative AI and also the pandemic. The second trend that we've looked at also is economic fragmentation. The world order that has been increasingly globalized since the end of the Cold War is, slowly fading out, potentially reversing. We're seeing a lot of tension between some of the major powers, and a decrease in economic interconnectedness on issues of, trade, technology, and other issues as well. The third major mega trend that we're also seeing is an increasing number of global and complex challenges, whether it's climate change or humanitarian crisis, and these issues are difficult for one government to solve them, and there haven't seen enough collaboration at the multilateral level to make a difference. And the public is looking at the private sector to play an outsized role in contributing to solving some of these challenges. The other megatrend equally important is inequality, and we've seen an increase in inequalities over the past decades, and that has a lot of perception of trust with banks, who are the stewards of the capitalistic system. So these increasing inequality has an important role into how banks are perceived. And finally, is the role of ethics and how investors, consumers, and customers are looking for greater action and accountability, not just to deliver on profits, but also on their social and environmental responsibilities, so to speak. More of a shareholder capitalism system is emerging. So I'll leave it at that, but hand it back to you, Paolo.
So, Edwin, if I can sum it up this way, while digital adaptation continues on the side of consumers and businesses, we are realizing that there are effective global challenges, for example, climate change, at a time where we're getting more fragmented and therefore less capable of tackling them the way we should. The inequality that seem to be addressable by growth might be too much persistent, and banks are now taking the blame as well, being the steward of the capitalistic system, so opportunities for the middle class. So this demands for a refresh understanding of the definition of value for companies, for example, ethics for business practices that definitely involves financial institutions. Now, on this landscape that is summed up by these 5 megatrends, which are those that in particular are relevant for banks, I understand that you reflected with your colleagues along 3 potential scenarios. So let me say you try to project what the future might look like and figuring out what happens to go from A to B. Right. And so which are the challenges and opportunities? So we can do the following. I can spell what each scenario looks like, and then you help us out understanding what that means in general, but also in particular for banks and fintech. You agree?
Absolutely.
Okay, so let's go. Scenario number 1 is about transformed banks that regain trust, which is already thought-provoking in itself. Now, this is the scenario. What you're envisaging is that the impact of fintech startups and big tech firms on the banking industry in 2010s was very mild compared to the disruption that followed. Once considered challengers, fintech and bintech companies are now leading players in Europe and in the US in 2035, having carved out a large share of the market by offering superior customer experience built around trusted smartphone apps and free, frictionless mobile payments. Now, traditional banks have ramped up defense strategies, embracing radically different business models in a bid to survive. So in 2035, banks established and protect their reputations by proving to customers they can be trusted to protect sensitive data and offer innovative products born of healthy market competition. Now, what is this all about?
Yeah, so that's a really interesting scenario, and as you said, we've tried to be a little bit thought provocative in terms of the actors and the big players today are no longer the players of tomorrow, and the business models are going to be different, and we looked at different driving forces in that respect. So we looked at how there's going to be kind of competition between these various actors, and there's going to be merger and acquisition. Some of the smaller players might kind of lose in this race. Others might be acquired, and to build on that development of technologies and platforms. There's also going to be a lot of governance changes to make digitalization at the core of the organization, and making sure that the employees are upskilled and ready for that transformation. There's also going to be a lot of partnerships between banks and external institutions, whether it's fintech, big tech, or other private sector organization, to be able to devise these digital ecosystems to be able to improve the customer's experience. And you brought that at the very beginning of the conversation, the issue of trust. We thought that this digital transformation is an opportunity for banks to reset this trust and regain it, since the last financial crisis have eroded that. So we see that as a driving factor to regain that trust.
Yes, we had in a previous episode of the Banker's Bookshelf, Mario Nava, Director General of the European Commission for Reform, and we talked a bit about public and private collaboration in the light of transformed regulation to facilitate all of this shift. So I remind the audience, take a look at our website and also go back to previous episodes. They all add up to build a compelling story. One of the highlights of this scenario I read in the report is in 2035, banks have clear and actionable disclosure requirements, giving customers more control over their money and their data. Now, I always say that a lot of the narrative in the fintech has been about data-driven banking, so how you drive the banks with data, but the question to be answered that precedes this is how you data enable clients. So first, would you give back to clients in a way that can act more accurately through transparency by helping them with data to make the decisions that matter? So would this be a way to regain that trust that banks can orchestrate to stay relevant and actually relaunch, if you like, their role in the economy?
Yeah, I mean, absolutely. That could be part of it. And, regaining this trust is listed in this scenario as a challenge. So it's not something that, can happen overnight. It's an aspiration and setting the right intentions, but, definitely transparency and, giving customers the ability to use their data for their own benefits is also going to play a role there.
So you identify three scenarios and three key opportunities under this scenario, right? Three challenges and three opportunities. So which are the challenges?
So the challenges are around kind of updating the legacy systems, like making investment in their infrastructure. It's gonna cost a lot, and also require upskilling of their labor force. The AI has definitely it's going to help companies be more productive, but it also come at the expense of how do we use it in a ethical way to make sure that there is no discrimination and bias perpetrated. And then the third one that I already talk about is reestablishing this trust by collaborating with different stakeholders, whether it's policymakers or consumers or other think tanks, is going to require a lot of challenges, and banks will also need to kind of balance between the short term and the long term in terms of profitability, but also how do they regain trust over the long term.
Okay, so updating legacy systems, the management of their risk, and reestablishing trust as a balance between profitability and value for all. And in a nutshell, which are the three opportunities?
So the first one, it's gonna help. These technologies will enable new products and services to be offered potentially at a lower price. So reaching unbanked population in ways that haven't seen before. We're also seeing potentially new business model, continuing, whether it's online platform or open banking, and then finally, the use of data for improving the customer's experience, but also for other purposes like anti-money laundering.
Okay, so this is a scenario where banks don't disappear, but they learn how to transform to stay relevant using digital technology and a new pact with their clients. Now, there's a second scenario you were thinking about that puts the emphasis on the climate action and the paradigm shift. So let me read this scenario aloud. After decades of division and delays among major powers on the climate crisis, substantial collective action occurs in 2035, so all stay tuned. The world is on track to limit global warming to 1.5 degrees Celsius above pre-industrial levels by the end of the century, preventing the most catastrophic effects of climate change. Now, substantial adjustments to the ways individuals live and interact and how businesses operate made this climate transition possible, so a change in agents' behavior. The digital revolution that began transforming the nature of communities, connectivity, and work decades earlier is now helping societies reach climate goals. So hopefully very optimistic.
Yeah, indeed. I think that was one of the most optimistic scenarios, and we were interested. We know that the window for action is closing, and we ask ourselves if we want to reach the Paris Agreement goals of aspiration of increased temperature to only 1.5 degree by over the next decades. We thought, what needs to be accelerated and how banks can play a role in that respect. And we saw three major driving forces here that will help the acceleration. The first one is kind of the ESG, revolution, so to speak, in terms of consumers and investors demanding more, but also policymakers setting the standards that will allow companies to measure their objectives and not just talk the talk, but being able to walk the walk. The other driving factor is around a carbon tax that is first going to be implemented in the EU, and other countries like the US and China will follow suits in the years after. And it's going to put a higher price on carbon and have a rethink on what are some of the alternative sources of energy to meet the needs of an economy. And then the last one is around new technologies. So a lot of the current technologies will contribute to a decrease in emissions, but in order to have this accelerated, we'll have new inventions needed, whether it's to reduce the cost of renewables, whether it's to improve electricity storage or car batteries. All of that will be needed to come together and accelerate, as I said, our objectives to the Paris Agreement.
So, Edwin, in 2022, the IBM Institute for Business Value, where I work, released a CEO study on sustainability, surveying on 3,000 CEOs across all industries worldwide. And the core message of this research piece was around radical transparency. So the relevance of data, the radical relevance of transparent data to make sure that effectively we make decisions that are informed decisions. And in your report, you quote the words of Tobias Adrian, who is director of the International Monetary Fund. He says, solid ESG data will allow banks to improve how they price climate risks and then allocate capital accordingly. Right now, banks and investors are in the dark relative to their exposure and a particular company's exposure to climate-related risks. So on top of good intentions, there's a lot of work that needs to be done on the data pipelines of the world economy to make sure that we know effectively where the problem lies and how impact can be generated. So which are the two challenges and two opportunities under the scenario that you see for the banks?
Yeah, on the challenges, I think the same way that digital has to be kind of integrated across the organizations. Same thing can be said about ESG. So it's not just a department that sits on its own. It's also about how it talks with other parts of the business, and how it all comes together in changing the culture of organization to enable this ESG adoption, so to speak. And that's going to be the first challenge that we see in this scenario. The second one is around kind of the trade-off, short-term trade-off for investing in fossil fuels. So investing in fossil fuels is still profitable in the short term, but the windows for that is closing. So making these type of decisions is going to be more tricky for banks. On the opportunity side, you've definitely touched on what one of our interviewee had mentioned in terms of using data to better understand and mitigate climate risks, which are going to be really important for banks. And then also the climate transition will require trillions of investment in infrastructure, and that is in itself an opportunity for banks to finance that transition.
Okay, so the first scenario was about banks learning how to survive, relaunching a trustful pact with clients and consumers. The second is about banks intersecting the need to address complex issues like climate change. And the third one is instead about the fragmented world. I just mentioned at the beginning of this conversation that while the world is closing up, being fragmented more and more than in the past, banks are also opening up. Think about the API economy. And they might do so also using different means, methods, and technology elements. So now, what is this scenario? In 2035, the period of globalization that steadily integrated markets around the world after the Cold War is over. That the liberal economic order has faded, fragmented by a deeply multipolar geopolitical landscape. Bilateral and regional trade agreements now dominate rather than the WTO, which was once the key forum for trade negotiations and disputes. US hegemony of the global financial system has been fractured by rivals' alternative payment systems, as well as the rise of digital currencies. Now, the first scenario seems to be the one, in a sense, optimistic. The second, facing a huge challenge, still optimistic. This one seems to be the one more complex and multifaceted in terms of scenario.
Absolutely.
That's a bit more the way you see it. unfolding?
No, exactly. So when we thought about the scenarios, we always wanted them to be relevant to banking, but we also wanted to kind of strike between something that's like realistic and not too gloom and doom or overly optimistic. And we kind of tried to balance these throughout these three. And you've pointed that out, that it's the least optimistic one, and it's more about how banks navigate these uncharted waters. And we see the fragmentation kind of happening, and the different poles, whether it's China, the EU, and the US, each kind of pulling their own interest, both economic and political. We also see kind of the rise of the BRICS countries kind of being more allowed and powerful. And what's interesting in this scenario, and what came up from our research, is this idea of having not just a fracture, global order, but also a fracture financial system where, SWIFT might not be necessarily the only way to kind of transfer across the world. So that was kind of really interesting to read about. And then also, the other kind of pushing factor is there's fears of inequality and fears that digital transformation will, steal jobs, so to speak, that will further drive efforts to steer away from globalization and reinforce these nationalistic sentiments that we talk more about in the report.
Okay, so far it seems to me that the scenarios are like an old movie, like a Western movie. The okay scenario, the good, and the ugly. Okay, very ugly, I think.
So to speak.
Now, so to speak, staying within this line of a fragmented world, which are the key challenges? I think you identified the intermediation cost and the cybersecurity risks, top of anything else.
Yeah, these are the two. So, in a fragmented world with multiple financial systems, the cost of intermediation might kind of be higher. Also, because of tensions and sanctions, it's harder to if you are a multinational company, to operate across regions, and also you'll have cybersecurity as an added complexity, layer of complexity to deal with.
And what about the opportunities?
So in terms of opportunities, we saw in this scenario that the race for technology will enable the maturation of digital currencies, and that could be kind of a plus for banks as they reach out to provide products and services that are more affordable. But at the same time, we also think that digital currencies might also undermine the role of banks as well. And the other opportunities around kind of new opportunities arising because of the shift in alliances. We're seeing both Asia and Africa as opportunity for operating there as trade flows are constantly changing.
Okay, so scenarios are very interesting to me because it enables us to open up our reference framework when we think about making decisions for a medium to long distant future. And the Economist Impact identified three scenarios from the good to the bad one or an intermediate. And I guess that everyone in the audience might be willing to consider their own potential scenarios that can be relevant for their own business, their own bank, and their own fintech. And whether you're optimistic, also remind yourself to build a negative scenario, you never know, and vice versa. So that enriches your perspective. But this research is not just based upon the professional imagination of the Economist Impact researchers. You guys also surveyed 500 banking executives from around the world, including corporate banking, commercial banking, retail, and digital banks. Now, are these bankers optimist or pessimist about the future? Which are the key findings?
So that's a really good point. So the qualitative scenario, which was built on a literature review, also we did an interview program as well, and it was definitely kind of part art, part science to imagine how the future might look like. But then we decided after this exercise, bring it back to the present and ask banking executive how they feel about it and how they are preparing. And from our survey findings, we realized that they are aware of these challenges, whether it's the digital transformation, these trends, so to speak, the digital transformation, climate change and the global issues, geopolitical fragmentation. So the things that we talked about, they are aware of these mega trends, and they're also cautiously optimistic about it. And that's kind of a good thing for taking action. And but we still see some kind of gaps, even though there's been progress on some of these issues. We see some gaps. One of them being, investing in cybersecurity. A lot of the executive have mentioned this as being a priority, but still, 2 in 5 have mentioned that they haven't. Only 2 in 5 have mentioned that they have invested in these capabilities, and also on the ESG front. Everyone, a lot of people, 76% had said that they feel like purpose-driven banking is important, but only a few of them, 2 out of 5, have said that they've established ESG goals to actually implement that. So there is optimism, but there's also room to improve and fill these gaps.
So let me reiterate the points. They're pretty interesting. The banking executives you talked to identified 3 top strategies to stay ahead. They said invest in cybersecurity and data protection, improve the customer experience, and improve data sharing between digital payment, fraud protection, and anti-money laundering functions to make that feasible at lower prices and more accurate. However, even among respondents who selected those 3 strategies as the most effective, you saw that a significant portion said that their organizations had not implemented them. 38% of the respondents in your survey said their organization had not invested in cybersecurity and data protection capabilities. So, wow. 44% had not improved the customer experience, and 49%, nearly half, had not improved information data sharing processes and functions. So it seems like we're on the right track in thinking, but we need to walk the walk, and more needs to be done. So now, thanks, Edwin, for sharing with us content of this research. In particular, I liked the approach of combining qualitative scenarios together with quantitative data. It's always important to enrich the perspective, looking at what the future might basically look like, though we don't know if that will be realized, but it enables us to be better ready for that whenever it comes. Now, where can the Banker's Bookshelf audience follow your work and research, and what is next in your pipelines?
So all of our reports are published on our economistimpact.com website. In terms of potentially new research, we're still working potentially on a very similar piece of qualitative scenarios for the insurance sector. So stay tuned on that, and hopefully maybe we'll present something next year.
I will definitely look at your web pages and make sure that I stay up to date. Now, everyone stays tuned for more, because our next episode of the Banker's Bookshelf will feature a discussion about a strategic working paper published by the researchers of the European Central Bank that is about how banks can tackle the hurdles of financial intermediation with technology. By now, you know that the Banker's Bookshelf is our collective moment of critical reasoning, We get inspired by authors and researchers like Edwin of the most interesting books, papers, and publications, which are finding their space in the libraries of curious bankers and fintech entrepreneurs. With that, bankers and fintech entrepreneurs can make better informed business decisions. Thank you, Edwin, for having discussed with us. I'm so glad that the Economist Impact, part of the Economist Group, joined us for this conversation. Arrivederci, and all enjoy the jingle.